This book explores the application of intermarket analysis to the foreign exchange market, the world's largest and most widely traded financial market. Intermarket analysis helps traders identify and anticipate changes in trend direction and prices due to influences of other related markets, as financial markets have become interconnected and interdependent in today's global economy. These markets include Forex futures and options, as well as major cash Forex pairs, which are affected not only by other currencies but by related markets such as the S&P 500 index, gold, crude oil, and interest rates. As the world economy of the 21st century continues to grow and as new advances in information technologies continue to be introduced, financial markets will become even more globalized and sophisticated than they are today, increasing the central role that the Forex markets play in the global economy. Since its introduction in the 1980s, intermarket analysis has become a critical facet of the overall field of technical analysis because it empowers individual traders to make more effective trading decisions based upon the linkages between related financial markets. By incorporating intermarket analysis into trading plans and strategies instead of limiting the scope of analysis to each individual market, traders can make these relationships and interconnections between markets work for instead of against them. Forex markets are especially good candidates for intermarket analysis because of the key role of the U.S. dollar in most major currency pairs, while other currencies tend to move in concert against the dollar. What influences one currency often influences many other currencies, usually not in lockstep but to a greater or lesser degree, depending on the circumstance. Knowing what is occurring in various currencies and other related markets can provide traders with both a broader perspective and greater insight into Forex market dynamics. I
recounted how I got involved in commodity futures trading and computerized technical analysis in my 2000 book, Trend Forecasting with Technical Analysis, Unleashing the Hidden Power of Intermarket Analysis to Beat the Market. However, I believe that it is worth repeating the highlights here because they address the convergence of the development of futures trading and trading software technology during the 1980s and 1990s that is now applied in today's hot Forex markets. I traded stocks and options for nearly a decade, using various technical analysis methods before I began day trading and position trading commodities in the late 1970s while employed as a hospital administrator for Humana, one of the largest for-profit hospital management companies in the United States at that time. A physician friend who traded gold futures provided the encouragement that moved me from equities into this new trading area. This was during the inflationary period when gold prices were building to a peak above $800 an ounce, so there was incredible market excitement surrounding commodities trading. At first I subscribed to weekly chart services, which had to be updated by hand during the week and required a very sharp pencil to draw my support and resistance lines, which in turn determined where I placed my stops. It was very annoying to anticipate the trend direction correctly, only to miss out on a big move after being stopped out prematurely at a loss due to an ill-placed stop. With only a handheld calculator available to compute numbers in the years before microcomputers, I learned the underlying theories and mathematical equations for numerous technical indicators, such as moving averages, and devised mathematical shortcuts to expedite my daily calculations. I was quite excited when I brought home my first personal computer in the late 1970s. Soon I was teaching myself programming and writing simple software programs to automate many of these calculations. Trade Secrets 22. I quickly realized that the marriage of technical analysis with microcomputers would revolutionize financial market analysis and trading. Although I had been hooked on financial markets and technical analysis for nearly a decade by then, it was the prospect of applying computing technology to technical analysis